Let's now have a look at the age pension. The government actually provides some assistance to people who have not enough money to live on after they retire. However, note that there are different qualifying ages for the age pension, and this information is actually obtained from the Human Services website. The payment for single or each qualifying member of a couple is actually different. For a single person, it is $772.60 per fortnight, while for each qualifying member of a couple is $582.40 per fortnight. These are the numbers that are used in your book, and for the sake of consistency, I will be using them. However, there are new rates from the Department of Human Services website. So, if you're helping someone to calculate their age pension, please remember to go to the Department of Human Services and look up the new rates. Note that these are the maximum you can get as a pension. You can't get anything more than that. That is considered as a full pension. This is the full pension for a single person, while $582.40 is actually the full pension for each qualifying member of a couple. The government actually uses a couple of tests to adjust or reduce the full pension. One of them is the assets test, while the other is the income test. Based on the assets you have, the government can reduce your full pension, or based on the income you have, could be derived from your assets or employment, your full pension will be reduced. And the lesser of the two amounts will be the pension. Let's now have a look at assets test. As I mentioned before, the full pension will be reduced based on assets test. This depends on whether you're single, couple, and also depends on whether you are homeowners or non-homeowners. These numbers here are actually called the assets limit. Anything above this limit, the full fortnightly pension will be reduced. To make this information a little bit easier to decipher, I've actually made this into a chart. Let's look at this chart here. First, let's look at whether you're single or couple. If you're single, the assets limit is $192,500, while for non-homeowners is $332,000. Anything above this limit, the full pension will be reduced by $150 for each of the $1,000 above that limit. For couple, of course the limit is increased. The combined assets has increased for homeowners to $273,000, while for non-homeowners is $500,000. Anything above this limit, the full pension will be reduced by 75 cents for each of the $1,000 above the limit. As a summary, for assets test, first you determine the home ownership, and then use the assets limit to reduce the full pension. That's the full pension, and that is actually the reduction. So the fortnightly pension is equal to full pension minus the reduction. The reduction is equals to the assets value minus assets limit divided by 1,000 times 150 for single, or times 75 cents for couple. Remember, this is the reduction or the adjustment to the assets test. Now, we are going to look at the income test. Again, the full pension could be reduced based on the income you have. There is actually a limit. This is called the income limit. For a single, it's $152 per fortnight, while for a couple, it's $268 per fortnight. If you earn anything above this amount, your full fortnightly pension will be reduced. Now, let's not worry too much about this yet, because I want to talk to you about calculating the fortnightly income. To calculate the total fortnightly income, there are two things that you need to know. One is the income produced by the income producing assets, and the other one is actually based on employment. Could be a casual work that you're having, could be whatever, part-time employment. All right. Now, let's first look at income producing assets and what are they. Income producing assets could be shares, could be bank accounts, could be government bonds, and so on and so forth. And all these income producing assets, they will give you a certain amount of money. The government use what you call a deeming rate to determine the amount of money these assets give you. It doesn't matter, say even your bank account is giving you the interest which is lower than the deeming rate, the government still use the same set deeming rate to calculate the amount of money you earn. So for any income producing assets, we need to know what the value is. And based on the value of the assets, the government put in a deeming rate. The deeming rate in this case is 4% per annum. To calculate the fortnightly income from assets, you use this equation here. The value of the assets times the deeming rates divided by 26. Why 26? Because there are 26 fortnights in a year. So this is how you calculate a fortnightly income from assets. Based on employment, that is more straightforward. To calculate the fortnightly income from employment, you've got to reduce it by $250. So you are only considering anything that's above $250. The total fortnightly income is therefore fortnightly income from the assets plus fortnightly income from employment. Okay, and that, remember, has to be greater than $250. Now, we can use the income limit to reduce the full pension. This is the equation you use for single, and this is the equation you use for couple. They are basically the same. The fortnightly pension is the full pension minus the total fortnightly pension minus the limit times 50 cents for single, whereas it's 25 cents for couple. So remember, this is actually the adjustment or the reduction. You know your total fortnightly income, you minus the income limit, and then anything above that 50 cents for single to calculate the fortnightly pension. And for couple, the fortnightly pension is slightly different because the combined income can go up to 268, and anything above that is reduced by 25 cents. Alright? Now, this is a summary. It's very important. You need to determine the status, whether they are single or couple, and then that will determine the full pension. You need to apply assets test to determine the value of the fortnightly pensions. For income test, you must determine the fortnightly income first. You have to combine the income from assets and from employment. Then you apply the income test to determine the value of the fortnightly pension. The lesser of these two amounts will be the fortnightly pension, round to the nearest dollar. From now, we'll actually look at some example. Now, let's have a look at some example. First, we consider Margaret, a retiree who owns the house she lives in. The house she lives in is worth $350,000. She has assets which are worth $500,000, of which $320,000 is deemed to earn 4% per annum income. She also earns a fortnightly income of $150 from tutoring. We need to determine her fortnightly age pension. Right, first let's decipher this whole paragraph. Margaret owns the house, so she is a homeowner. And because she lives in the house, we do not consider the worth or the value of a house at all. So this $350,000 is totally not considered. We need to consider other assets of hers. Those other assets of hers are worth $500,000, and that will be used to calculate the assets test. Out of the $500,000, $320,000 is actually deemed to earn 4% per annum income, and that will be used in the income test. She also earns a fortnightly income of $150 from tutoring, and again, this amount will be used for income tests. Right, how do we calculate how much age pension Margaret will get? First, we'll just consider the assets test. The value of Margaret's assets is $500,000. We know that from this table, for a single homeowner, the assets limit is $192,500. So, using that amount, we actually can calculate the adjustment. We know that anything above this assets limit, we need to reduce the fortnightly pension by $150 for any $1,000 above that limit. So, using the formula that I gave you, which is the value of Margaret's assets minus the assets limit divided by 1,000 times 150, that gives us an adjustment value of $461.25. So her fortnightly pension based on the assets test will be $772.60 minus $461.25. That gives us $311.35. Right. So from assets test, her fortnightly pension is that much. For the income test, we need to consider income from assets and income from employment. Let's look at income from assets first. Margaret's income producing assets is worth $320,000, and it is deemed to produce an income of 4% per annum. The 4% per annum is actually the deeming rate. So her fortnightly income based on assets is $320,000 times 4% per annum divided by 26 to make it into a fortnightly income, which is $492.31. The employment. Margaret's income from employment is $150, but this is less than the income limit of $250. Therefore, this amount, we don't have to worry about it in the income tax. So Margaret fortnightly income will be just the income from her assets, which is $492.31. And this is over the income limit of $152. Therefore, her pension will be that amount, which is the maximum pension that she can get, minus the adjustment. The adjustment is the fortnightly payment minus the $152, and anything above that, we use 50 cents of anything above that to calculate the adjustment. That works out to be $602.45. Based on her income test, she should get $602.45. But we need to compare the amount from the assets test and the amount from the income test. Alright, which one is a lesser amount? The amount from the assets test is less. So therefore, she will be paid $311.35 per fortnight. Now, we need to round it up to the closest dollars, and she will only get $311 as a fortnightly pension. Alright? I better move that up a little bit higher so that you can have a look at it. Right. I'll stop there, and I want you to have a look at example 2. I need you to spend about 5 minutes, pause the video, and actually start looking and work out this example. You should have enough time to look at this example. It's fairly straightforward. We looked at John, who rents a house after retirement. That means that he is not a homeowner. He has assets which are worth $150,000, of which $80,000 is deemed to earn 4% per annum income. Right, how do we do it? Again, we split it into assets test and income test. Since John is not a homeowner, the assets limit is $332,000. We know that he only owns assets worth of $150,000, which is less than the assets limit. So therefore, he can have the full pension of $772.60 based on the assets test. For income test, let's have a look at the income from the assets. John's income producing assets are worth $80,000 and the deeming rate is 4% per annum. So his fortnightly income based on assets is actually 80 times 4% divided by 26, and that's $123.08. Because he has no income from employment, we don't have to actually consider his employment at all. His fortnightly income is $123.08. Now, the limit for single is $152 and $123.08 is less. So, based on the income test, John will be paid the full amount of $772.60. Compare these two amounts. They are exactly the same. So, in this case, John will receive the full pension of $772.60 per fortnight. Again, we need to do both assets and income test before we can actually determine the amount. Right, third example. Again, I want you to pause the video for about 5 minutes after you've read this question and then look at my solution. Right? Third example, we are looking at the situation of a couple now, Mr. and Mrs. Whites. They own a flat which is worth $200,000 and they have assets which are worth $425,000, of which $298,000 is deemed to earn 4% per annum income. They supplement their income by making $100 per week cleaning at the local aged care facilities. We need to determine Mrs. White's fortnightly age pension. What number don't we have to take into account? This for sure, because this is the value of the flats they live in and it's what they own. So we take that out of the equation. This number, the value of the assets, will be used for the assets test, while this number, $298,000, will be used when we look at the income test. Also, we need to look at the employment income as well. Let's do it. Now, this is the way I would like you to set up for a test or an exam. Start off with assets test. You know the value of Mr. and Mrs. White assets is $425,000, and this is above the assets limit. Therefore, we need to adjust the fortnightly pension. So, based on this formula, or what I've given you, you need to be able to calculate the adjustment, whatever amount you need to deduct from the full pension. So, we look at the assets limit. Any amount above that, the reduction is $75,000 for any $1,000. Is 75 cents for any $1,000 above the assets limit. So therefore, in this case, the fortnightly pension is $582.40 minus the adjustment, which gives you $468.40 per person. For income test, let's look at the asset first. They have $298,000 worth of income producing assets, and the deeming rate is 4% per annum. Let's calculate the income for the assets. 298,000 times 4% divided by 26 to make this into a fortnightly income. That's $458.46. Employment. They earn $100 a week. Therefore, their fortnightly income from employment is 2 times 100 is $200. This is less than 250, so let's not worry about it. So, To calculate the fortnightly pension based on the income test, we need the adjustment figure. Okay. You know that the limit is 268 for a couple, so therefore we need to use that in our calculation. Their fortnightly income minus that multiplies by 25, 0.25 actually. So it's 25 cents for any $1 above that. That works out to be $47.62. So the adjusted fortnightly pension is 534.79. Look at these two numbers. Which one is smaller? That, definitely. So Mrs. White will be paid the lower amount, which is $468.40. Her fortnightly pension is $468, rounded to the closest dollar. Finally, we look at the last example. Mr. and Mrs. Brown, who lives in a caravan park. This time, please take another 5 minutes, pause the video, and actually try the problem yourself. I hope you have had enough time to actually look at Mr. and Mrs. Brown and determine their combined fortnightly age pension. Again, this is how I would set up for a test or exam. First, start off with the assets test. The value of Mr. and Mrs. Brown's assets is actually $285,000, and this is lower than the assets limit. Because the assets is actually lower than assets limit, they can receive the full pension of $582.40 per fortnight for each one of them. For income test, they have $200,000 worth of income producing assets, and the deeming rate is 4%. This time, the fortnightly income based on assets is calculated to be $367.69. For employment, they earn $400 per fortnight. So this is greater than $250. We need to take this into account. 400 minus 250 gives us $150. And then the total fortnightly income is therefore $517.69. We need to adjust that. Anything above the 268 limit, we'll have to take, for each dollar, we have to reduce the pension by 25 cents. So, based on that, their pension becomes $519.98. Now, let's check that and that. Compare those two amounts. Which one is smaller? This for sure. So each one will therefore get a pension of $520 per fortnight, rounded to the closest dollar. Because we are looking at a combined fortnightly pension, this is what we need to do. Multiply the pension by 2, and it's $1,040 for the both of them. Hopefully, the examples I've given you is actually enough for you to work on some of the exercises. Let's look at the summary again. We need to determine the status, whether it's single or couple. From there, we can determine the full pension. To adjust the full pension, we need to apply assets test and income test. Assets test determine the value of the fortnightly pension based on the assets they have. Before we can apply any income test, we need to determine the fortnightly income, which is a combined of the incomes from assets and employment. Then we can apply the income test to determine the value of fortnightly pensions. And then the lesser of the two amounts will be the fortnightly pension. Hopefully, this video has provided you with good enough information for age pension. Thank you very much for listening.